This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
Everybody, this is what we call the Friday edition of Bloomberg Businessweek Daily. Carol Massar, Tim Stenivek. No, we are not at Bloomberg headquarters in New York City. No, that is not my pool, nor Tim's pool.
And nobody's gone in the pool yet. I keep going. I go down there and I say, what I will give you for jumping in this pool in the middle of the Uncharted Summit as everybody is hanging out, talking to founders, entrepreneurs, investors. There are the CEOs, CROs, CIOs, COOs of so many companies down there right now. It is the Uncharted Community Summit.
It is, indeed. It's our second year doing this, and it is such a great eclectic mix of individuals. Yes, folks who are managing money. Yes, folks who are starting up companies, venture capitalists, entrepreneurs, and it all comes together at Uncharted. So coming up over the next 3 hours, we're going to be talking about the macro, the backdrop. We continue to see headlines out of the Middle East. That's certainly an issue. But we're going to get into what companies are doing and how people are investing against all of this, because every day on Bloomberg, we find people buying and selling constantly. Alli McCartney, lucky for us, we met her 1 year ago at Uncharted. She's sitting down, getting ready to talk. I'm curious what she is seeing in the last year, how things have changed. She's, of course, Managing Director of Wealth Management and Private Wealth Advisor with Alignment Partners at UBS. So we're going to talk to her about some of that market chop that's going on. I think she thinks there's going to be more. Well,
I mentioned, too, we're talking to some of the entrepreneurs here who've also successfully exited companies at major valuations. One of those is Adam Dell. If his name sounds familiar, it's because he's the founder of Clarity Money. Now he's the founder of Domain Money, but yes, he's also Michael Dell's brother. He's made his own name as a venture capitalist and a fintech investor. He's going to be joining us in just a few minutes.
Yeah, we've got another entrepreneur starting with us as well. We're talking about Poppi. She's one of the co-founders, Allison Ellsworth. She created it, sold it to PepsiCo for more than $1 billion. So curious about what she's been up to. Jeff Perry, Chief Revenue Officer on Carta's next move. I mean, they've been buying companies, shifting, doing different things. So we're going to check up.
Did you see the scale model of the private jet on the lawn out front?
I did not.
Oh, okay. Well, that's pretty cool.
I was too busy looking at the tennis courts and getting ready for the pool.
We're talking to the Chief Revenue Officer over at Sentient Jet. Alex Hawley is going to be joining us, talking about the World Cup effect. And I'm also wondering, seeing anything with those AI valuations and those employees starting to travel private?
Yeah. I work for SpaceX. I've got some extra money. Can I fly privately?
Not you.
Not me.
Okay, that's just somebody.
No, very happy to be working at Bloomberg. Folks, let's set it back to Bloomberg, and let's check in on the market trade, because we do have some movement going on. Amy Morris is in for Charlie Pell.
All right, thank you, Carol. Chipmakers got pummeled by another burst of selling. Investors pulling money from American stocks for the first time in 3 months. Record withdrawals from tech funds. We check those markets for you all day long here at Bloomberg. The S&P 500 is up about 0.1%. NASDAQ up about 0.1%. The Dow, little change now on the downside. 10-year Treasury yield at 4.37% and the 2-year yield at 4.09%. Micron shares down more than 4%, but look at ON Semiconductor. Those shares down 24%. Now, Oman has told European officials there's no way they can go back to pre-war status quo with the Strait of Hormuz, and transiting ships may have to be charged some fees. Still, though, oil is headed for its biggest weekly drop in a month. Oil price is now WTI crude down more than 3.5%, just over $69 a barrel. Brent crude down more than 4%. It's about $72 a barrel. Volkswagen is looking to cut additional jobs and may shutter factories to make Europe's biggest automaker more competitive. That includes doubling staff reductions and cutting general overhead by the end of this decade. Labor leaders have vowed to oppose these plans. Volkswagen shares about 4% lower. And Boeing secured an order from China Southern Airlines valued at $3.62 billion. No, not $3. $3 billion. $3.6 billion. Marking an important win for Boeing, which shares are 0.5% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek at the Uncharted Summit in Southampton.
Yes, indeed. Amy Morris, thank you so much. We are at Uncharted, and we continue to watch these markets. Volatility continuing, I think it's safe to say. We've had a bunch of down days. I think we have a slight gain on the S&P for the week, but there are a lot of concerns over whether those vast investments in artificial intelligence, are they going to pay off? Will they justify those hefty valuations?
Also, big concerns about what's happening in the chip industry right now. We're seeing chip stocks get pummeled today. Volatility, I think, is fair to say. It's the word that really describes the trade over the last week or so.
Yeah.
Especially coming out of Korea.
It sounds like it's freaking out investors, too, because investors pulled money from American stocks for the first time in 3 months with record withdrawals from tech funds. So let's kick it off, our coverage here at Uncharted. Back with us is Alli McCartney, Managing Director of Wealth Management and Private Wealth Advisor with Alignment Partners over at UBS. They've got just over $1 billion in assets under management joining us here. First of all, we have to celebrate our 1-year anniversary.
It feels like a reunion. I'm very, very happy to be here.
We first met you a year ago, and we have been talking with you over the past 12 months, and you've been really a valued voice for us.
Thank you.
We so appreciate it. So, I do call you a friend of our broadcast. In the past year, there's so much that has happened. This administration, tariffs, policy changes, wars, AI, the narrative continues to change. What's different this year versus where we were 12 months ago?
I think so first of all, earnings, right? So there is a lot of certainty around the micro of the market, and so that all of the macro of the market, in a sense, it feels like, for the most part, taking out the last couple days, has been heavily discounted. So when you have an environment where you have a secular evolution like AI, and you have earnings for these companies coming in the, I'm not even going to put a number to it, but for an average or median company coming in, let's say 5 to 8%, there are a lot of tailwinds. Volatility is for sure here to stay. There are 3 major reasons that I think that. The first is that we have a major regime change at the Fed. We have a market that is obsessed with Fed speak, projections, talk, long statements, dissecting dots. We're not going to get that anymore. So that is going to give investors and people that allocate capital pause.
Yeah.
So it becomes harder for them.
It becomes harder for them because everybody wants a degree of certainty and comfort to make investments.
Even though what they say often turns out not to be true.
So that's quite funny.
Not in the sense for any nefarious reason. It's just, listen, nobody has a crystal ball. It's impossible to predict the future. And what those dots end up saying aren't necessarily what ends up happening.
Dot plot not set in stone, right?
So look, and it's true. Everything gets revised. Everything is in the middle. We are just simply, if you think about what volatility is, right? Volatility is a constant mismatch between buyers and sellers. And right now we have a ping pong event in narratives, right? Mm-hmm. So one day, Micron comes out with extraordinary earnings and chips that have been down. Everybody's up. Everybody's happy. The margin stories, tokenization is back. The next day, Apple says, you know what? We have parts inflation because Micron is up so much and we can't get chips. And the whole market goes down. And that is really what we are seeing on a daily basis. And so that's whether it's the war in Iran, whether it's chips versus AI infrastructure spending. And so we're just at a point where when you marry that with it's a midterm election year. We just had a quite shocking election result in New York City. We're probably going to get more of those. Mm-hmm. Even in a normal election year, you see volatility. So all of these things together most likely are going to create continued fragility in markets.
We love talking to you about the macro and really everything that you just spoke about. One thing that we don't get to talk to you about much is your clients and what they're doing and where they're coming from and where those new clients are coming from. Carol and I spent a lot of time. Well, yes, you point down here.
There's a lot of folks.
But I'm curious that, I shared a ride out here with a founder from the hotel from San Francisco. He had a big exit. He was talking a little bit about the opportunities that he sees in the Valley right now. We talk all the time about all the money and wealth being created as a result of it.
It's extraordinary.
AI $1 trillion valuations before these companies go public.
Yeah.
Are they coming to you?
Yeah, so I'm calling this the SpaceX summer. The way restaurants are behaving, the way real estate in the Hamptons are behaving, you can just see that people feel flush. People feel flush whether it's liquid or not, and people are anticipating more of that liquidity and cash flow with all of those.
If it's not liquid right now, are you providing them margin?
So the answer is yes. So basically, about half of my clients are private company founders. So I work often with companies well before they've gotten to liquidity, helping them structure their own balance sheet and their ownership such that they are taking some chips off the table when it makes sense. They're protecting it from a trust and estate and litigious perspective. And then what happens is, when or before you get liquid, you start planning these things, right? Because if you want to buy a house out here, but you have illiquid SpaceX, how are you doing that? You're doing a concentrated loan. If you can, you're doing a derivative. You're anticipating that it's going to be volatile for all the reasons that we discussed. And you're also anticipating that it's going to look different in 6 months or 3 months when the lockup comes out. Because I think one of the things that you're seeing here and that you've been alluding to is Silicon Valley is flush with innovation. They have not necessarily been flush with capital because public and private companies have not been liquid as much as they have in the past, right? So I think of my own investment portfolio, my client's private investment portfolio, and things we thought were going to be liquid and have events, either IPOs or purchases 3, 4, 5 years in. We're now 7, 10, 11 years in. So I think we are about to get a sea change in terms of the amount of liquidity that can go into the market and that venture funds can charge on.
Yeah.
And so you're starting to see a lot of that, and there's going to be positive and negative consequences, both in public and private markets, to that amount of money hitting the skids and doing it at a time where we do have so much political and geopolitical uncertainty, and we are at market highs.
Feels a little uncomfortable.
I think Alli just said buckle up.
That's what I felt like, too.
Well, but buckle up also means opportunity.
Yeah.
I mean, the amount of buying that we've been doing for these clients, especially if you're coming out of something where you've had a concentrated position and now you can diversify. We have the Russell up 20%. We have Europe outperforming the U.S. So there are lots of things that are working.
Yeah, we've kind of heard that in the private credit market where people are finding some opportunities of things that have been really beaten up, but there's still value. Love, love, love. You were the gift that keeps on giving.
Amen.
Alli McCartney,
Thank you.
Thank you so much. Managing Director of Wealth Management, Private Wealth Advisor with Alignment Partners over at UBS, joining us here at Uncharted. Hey, folks, we want to just check on the market trade for you because we're bouncing around. We're getting ready to wrap up the Friday trade as well as the week overall. And, I do think it's interesting what she said about volatility. We've seen that, although the VIX not necessarily kicking up a ton. What do we got, though, on the S&P 500? We're up about 11 points. We're up about 17 on the Dow and down about 196 on the NASDAQ 100. But go inside. We say this a lot, Tim. You go inside the S&P 500, you still have most of the names actually trending higher today, about 324 gaining ground on this Friday. So, dig a little bit deeper, and you do see Moderna's up about 10%. You've got some other names that are up pretty significantly.
Don't dig too deep into the stocks.
I
All
won't.
you're going to find is stocks that are lower today. The stocks right now down about 4.5%. All 30 members of the stocks are lower. We got some companies making big moves. Even the best performer, NVIDIA's down 0.5 percentage point. TSMC down 0.6%. Qorvo down 1%.
Still up about 87% year to date. Just going to say that I would take that in any given year, but we'll see what happens. It's still only June. All right, our next guest we actually met. Alli we met last year at Uncharted. This next guest we just met last night at Uncharted. It was kind of a relaxed, casual gathering. We chatted with him for a while, and we wanted to have him join us on air. Jeff Perry is Chief Revenue Officer at Carta. Prior to joining Carta, his career took him to the pre-IPO DocuSign, a company we all know well, and then he also spent 13 years at Oracle. He ultimately served as VP of Sales. So glad you could join us. We did. We're like, give us your card. Let's get the card just in case we want you to come join us. And you are. Thank you.
I'm so glad we met. Thank you for having me.
We are too. We talked a bunch last night about a ton of different things. But let's talk about Carta because it was founded back in 2012. So it's now, about 14 years old. You guys, it sounds like you've shifted, made some changes. You're making some acquisitions. What is Carta today? What does it want to be?
Yeah, well, thank you. We've evolved a lot over the 14 years, especially the last 10. We started as what most people know as the cap table company, and we were called eShares at the time.
Yeah.
Really trying to
Which I had forgotten, but it was reminded.
Yes, started as eShares, and our problem statement was to try and solve eliminating shipping costs for stock certificates, which became how do you take a software lawyer problem and put that into the cloud and manage cap tables in that way and issue equity to millions of investors and employees all around the world. We now have 50,000 plus companies on the cap table platform, and we've added additional products to add more value for all those founders. Our total compensation benchmarking tool, QSBS tax advisory. So start with cap tables and then offer more to founders to help them on their growth journey. That has now also...
To take them public?
Well, as we do that, we partner with Morgan Stanley, and as they're on a path to public, we work toward putting them on their platform, and we work together to do that. So we support them from two founders and a dog in a garage all the way to their path to IPO.
At what point do they become clients of Carta? Is it those two founders and a dog in a garage?
It is, and that's also evolved over time. When we had just a paid plan originally, and a couple years back we started offering our launch product, which was for those early founders that haven't even really raised money yet. So companies that are early stage, raise less than $1 million or have 25 stakeholders or less on their cap table, we offer a free platform for them. The idea is capture early founders, help them through their growth journey, and if they're successful and continue raising money, they'll convert to a paid plan and we'll grow with them.
One thing that I find interesting is that you have this visibility into all these companies and how they're doing, how they're being valued. What can you tell us about the economy out there right now for these startup founders, for these companies, especially when so much of the air is being taken out of the room by a couple $1 trillion private companies?
It is. So it's an interesting time to be a founder and investor. But I think what we're finding, or what we'll start to see more of, is more companies being created because of the wealth being generated out of some of these AI companies. And so some of the recent IPOs will start to foster more founders out in the ecosystem that have some of their own resources to start doing that, but we'll also start searching for outside investment to help them do that. And that's where we bled into not just being the cap table company, but building our fund administration product as well.
Jeff, what kind of companies, though, are you seeing that are being founded today? Is it all, we talk so much about AI. Is it all about that, or what are you seeing?
Because of what we do, we see all of it. So, yes, it's, of course, heavily tech AI-led. I also work with, 2,500 venture and private equity firms, and you'd be amazed at some of the companies that those firms are invested in that are more brick and mortar, building outdoor screens to keep mosquitoes out, or weather over swimming pools in the east and weather conditions. So you see a little bit of everything, but of course the primary is focused on how you find an AI solution to solve a problem.
Ultimately, it comes down to that.
That's right, yeah.
Yeah, Carol mentioned some of your background, DocuSign pre-IPO and through the IPO, Oracle for many years before that. How do you use that experience in what you're doing right now at Carta?
Yeah, you never know as you're living through it. But growing up at Oracle, I experienced probably 100, 150 acquisitions over the time period I was there.
People have to remember that this has been such an acquisitive company over its lifetime.
It's really amazing. Again,
you went through the list last night, and I was like, oh yeah, PeopleSoft. Go through the list, right?
Yeah, BEA, PeopleSoft, Sun Microsystems, and we, part of
Sun Micro was massive.
Yeah, part of my career launch was having an opportunity to help rebuild some of the hardware sales teams inside of Oracle, which no one would ever have thought that was possible had we not acquired Sun. So, but to answer your question, I think having experience in helping integrate these acquisitions into what was then the Oracle engine has helped me a lot with my experience now at Carta. We've done 5 acquisitions over the course of the last 9 months.
Right.
Most recently, the biggest were a CRM that attaches to our fund admin ERP platform. And then also, even more recently, is a law firm. And so we're taking what is basic compliance and risk services that firms are paying the law firms to now be able to do that through our Carta AI tool.
We need to stay in touch so we can continue this conversation. We've got to run now, but I'm so glad we all ran into each other last night. Jeff, thank you.
Thank you so much for having me.
Jeff Perry is Chief Revenue Officer at Carta. Coming up, Adam Dell of Domain Mode.
$221 on Wall Street. I'm Amy Morris. Tech stocks dragged global indexes lower following renewed selling in chip makers, while a report that OpenAI could postpone plans to go public also weighed on sentiment. Investors pulled money from U.S. equities for the first time in 3 months. Record withdrawals from tech, price increases in products like Apple and Microsoft triggering fears about the staying power of chip demand. We check markets for you all day long here at Bloomberg. The S&P 500 little changed on the upside, NASDAQ little changed on the downside, and the Dow little changed on the downside as well. 10-year Treasury yield at 4.37% and the 2-year yield at 4.08%. SpaceX's blockbuster bond sale is weakening quickly in the secondary market, with traders saying they cannot recall another recent deal that widened this sharply. Paper losses totaling about $305 million. The selling pressure suggesting fast money accounts piled into the deal look to flip for a quick profit. Shares of SpaceX about 0.5% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec at the Uncharted Summit in Southampton.
All right, Amy, thank you so much. Yes, indeed. Carol Masser, Tim Stenovec, live here at Uncharted in Southampton. And, think about fintech. I mean, there's things like nowadays, agentic AI, digital and tokenized assets, programmable money, compliance. I mean, fintech has come a very long way when you think about years ago when it kind of first came on, certainly the landscape and how we talked about it.
Yeah, somebody who's been in fintech really since the very beginning is Adam Dell. He's the founder and CEO at Domain Money. He's known for a lot: venture capital, Clarity Money, which sold to Goldman Sachs for reportedly $100 million just a few years ago. He's also former principal over at Crosspoint Venture Partners. He joins us here at the Uncharted Summit in Southampton. Welcome. How are you?
Thanks for having me.
Hey, thanks for joining us. As we mentioned, you have been in fintech really since there was no tech in finance. This is what you've been doing for such a long time. What was the opportunity that you identified right now with Domain Money?
Well, really, it's about the empowerment of the consumer. The internet was the first wave of giving access to consumers information about choice and options, and really helping them understand what pricing power they did have relative to their bank, their financial advisor, their investments. And that opened up the mind of the consumer to really delve deeper into what their options are. And of course, now with AI and with these incredibly powerful tools at the hands of consumers, they have much more leverage when they are dealing with things like retirement, their financial advisor, which is really the opportunity we're pursuing at Domain Money. We are trying to blow apart the 1% AUM fee that most people pay to their financial advisor, which, if you do the math over the course of a lifetime, is essentially the equivalent of giving your advisor a house.
Okay, so here's what I don't get. Here's what I don't get. So many rich people are super smart, hence how they got their money. They are still paying huge management fees that end up eating into returns.
Yep.
Even people who don't have a ton of money are paying huge management fees. I thought the robo-advisors were going to kill this. But you know what? Quarter after quarter, we hear from the banks, wealth management business is booming. We're bringing in more and more clients. We're bringing in more and more money. Why?
So a couple things. One is that when the complexity is high and the cost of being wrong is high, you want an expert. And while robo-advisors solve one part of that problem, which is just your fundamental taxable investment accounts, what about your 529 plan for your kids? What about your RSUs? What about your 401k? What about how you manage the cash flow and budgeting to fund the various goals you have for the long term? Robo-advisors don't do that. And people want a bespoke human experience. They want to be able to sit down with somebody that they trust and understands the nuances of their life and help them navigate all of those pieces. And so, people continue to seek out a human advisor and will continue to seek out a human advisor. If you want a digital AI advisor today, you can get it from ChatGPT for free, essentially. But people don't want that. They want the interaction with someone who has judgment and understands, again, the nuances of their family and their lives, and they'll pay for it. Unfortunately, most people don't appreciate that 1% fee is enormously erosive to their long-term net worth.
One of the things I'm curious about, too, flat fee you guys do, you've got one advisor, one, that works with one client, and you do that through the duration as much as you can.
That's right. With Domain Money, you get a dedicated certified financial planner, which is the highest level of designation in the advisor business. They stay with you throughout your journey. And we handle everything. We manage your investments, we file your taxes, we get you an estate plan, we give you a financial plan, obviously, and we work with you and coach you along the way to help you stay on track as your life unfolds and as things change.
Adam, who's your demographic? Give us an idea of who is mostly on the platform.
Yeah, our average customer is 42 years old, household income of $364, net worth of $1.3 million. So they're right smack below the traditional wealth management sector. And they are frustrated because their options are call Vanguard, get sold an ETF with somebody with a headset on trying to get another account.
Yeah.
Or they go to a traditional wealth management firm and they say, you don't really have enough investable assets. We'll take you because you're an accommodation client, a friend of the firm, but they'll end up assigning you a junior person, and the quality of the advice you get and the attention you get is quite low. And nobody wants to feel like a second-class citizen wherever they go.
What are the assets they want? I'm curious about, we've spent a lot of time, I feel like, over the last couple of years talking about private credit, alternative assets. Like, what is it that they want?
It's a great question. Our client is not looking for private credit or access to alternatives. It's really about the correct tax allocation and strategy and minimizing those taxes. It's about allocation of their investments given what's in their 401k and their RSUs. And it's really about planning, ensuring that you're consistently saving towards your goals given the permutations of life as it unfolds.
Are they going to stay with you throughout their financial journey?
Yeah, that's our ambition.
It is?
Yeah.
So they'll grow with you because they won't, start making more money and then go and become a private client at one of the big banks.
That's right. So this client will have $5 million in 20 years, and they'll inherit $84 trillion over the course of the next 20. And our ambition is to evolve our service offering and serve clients as their complexity increases. And to that point, we do have clients today who are in their late 50s and have $5 or $6 million and are looking for the proper allocation.
What's the stuff that you're missing right now? Like, what do you still need to build out to accommodate people who have even more complex financial lives?
Well, we've partnered with Trust and Will to help with things like estate planning where there are much more complex trusts in place rather than just a straightforward will. So we feel like we can serve clients pretty well today, but of course over time we'll enhance the platform. One of the things that we're working on is building out our scenario planning capabilities, which is what clients really want is to be able to interact with a digital platform that's modern and next gen, but also have a human advisor. And so we're working on expanding our scenario planning tools to basically serve clients as they get more mature in their life.
Got to ask you, because you guys, I love talking with folks like you because you see stuff on the platform and what real investors are interested in. Are they still interested in cryptocurrencies? Like, I'm curious, you've been involved in this world, and what's going on as we've seen certainly Bitcoin fall back dramatically from the highs?
Yeah, I mean, there's always an interest in the thing that's going up the most. And when crypto is tearing, people are very interested in it. When it sort of falters or goes down, people are less enamored by that asset class. But we absolutely have lots of clients who have crypto, and we help advise them on what allocation would be an appropriate risk to take given their timeline, their horizon, and their, essentially their willingness to bear risk.
I mentioned that you sold Clarity Money to Goldman Sachs, reportedly for around $100 million. Who buys domain money?
I get that question a lot. We really focus, and I felt the same with Clarity Money. I like to focus on solving a problem, and there is 29 million people in the United States who fall within the demographic that I described earlier that really can't get good wealth management services, and we're trying to solve that problem. I think if we do that well with technology and our teams, there will be no shortage of institutions that would be interested in our business.
What would your timeline be for that?
I don't really have that in mind.
Are you in this for the long haul, or are you? I mean, because you are a serial founder, you're a serial entrepreneur. Like this, you invest in a lot of different places too. Like I understand you're committed to this, but how many years are you going to be running it? Do you think?
That's a great question. I'll let you know when you answer that clearly.
Are you working for investment bankers or something? I don't know on the side.
You know something I don't know?
Yeah,
it is a time when there are it seems like there are so many opportunities for exits, and there's so much growth in this area. And like you were saying, I think a lot of financial institutions would find this demographic interesting, one that they don't traditionally pay attention to because it doesn't necessarily make sense for them. But you found a way for it to make sense financially.
Yeah, I mean, we can serve this client segment profitably given our technology and the way we serve this client. And part of the magic that we've uncovered is that we really define the journey clearly. and map it out for the client rather than let the client drive, which is typical in the industry. Because it's a service-oriented business, you tend to let the client do whatever they want, which is if they want to call and talk about the machinations of the market, you talk to them. We've come up with a service delivery model that really locks down the experience, and we found that clients appreciate it because they feel like they were being led down a path that helps them end up at the goals they care about, rather than just talking about the market, which really isn't very useful. What's most important is, do you have the right allocation? Do you have the right long-term strategy? Are you sticking to that strategy? And will that strategy yield the result you want? But to your point about the institutional interest in our business, we believe that there's no shortage of the large wirehouses, the large consolidators in the RIA space who would find our business model and, most importantly, our technology incredibly compelling. What we have built is a product that serves the actual needs of the emerging affluent. And the needs are connecting cash flow and budgeting with long-term goals. You go to a traditional wealth management firm, and what they focus on is investment management. They'll give you a 60-page analysis, Sharpe ratios, and Monte Carlo simulations of your investment portfolio. And if you're 42 and you make 360 as a household, what you really care about is how much can you spend on vacation this year, not am I getting this nth degree of yield on my Monte Carlo simulation if I were to change my allocation in my portfolio. People wake up every day and they're not thinking about asset allocation. They're thinking about, can I go on vacation?
It's kind of reality,
Can
right?
I buy the house I want? Can we afford to send the kids to private school, which we believe they need and would benefit them? Those are the life decisions that we help people navigate through in the context of their long-term goals.
If we could just kind of broaden out the lens for a moment and just think about the conversations we have so often at Bloomberg about artificial intelligence and where this is all going, and I think about things in the financial world, prediction markets, what do you find interesting right now?
Well, AI is just incredible. I mean, I know I'm not alone in that proclamation, but we use AI in every part of our business, whether it's the sales side, engineering side, marketing side, the service delivery of our financial plans. And the rate at which these foundational models are learning and improving is just astounding. The other incredible thing is how quickly the costs are declining. Mm-hmm. We consume a lot of tokens in the utilization of our service delivery. We ingest a lot of documents, we parse a lot of documents, we extract a lot of data, and the cost of tokens is declining so precipitously that really our costs are declining. And so I'm just incredibly excited by the disruption in business process innovation that AI presents for our business, just on a pure operational level.
Yeah.
And so I think about that in the context of all the millions of businesses that are out there. And if you talk to any small business owner or even a large business owner, they are really focused on finding ways to use AI to improve cost and improve efficiency. And if you're not, you're really not doing the right thing.
Yeah, so it sounds like ROI you're finding in a big way. This was really fun. Thank you so much.
Thank you for having me.
Yeah, thanks for finding time for us. Adam Dell, founder and CEO of Domain Money. So much more, too, but just a great voice on everything that's going on in the world and certainly on FinTech.
Well, from a FinTech entrepreneur, in just a few minutes, we're going to be speaking to an entrepreneur when it comes to the consumer packaged goods space. Allison Ellsworth, the co-founder and chief brand officer at Poppi, is going to be sitting down with us here at the Uncharted Summit in Southampton. This is Bloomberg Businessweek Daily.
$240 on Wall Street. I'm Amy Morris. Stocks are mixed and just barely moving. We check markets for you all day long at Bloomberg. The S&P 500 little changed on the upside. NASDAQ about 0.2% lower. The Dow little changed on the downside. 10-year Treasury yield at 4.37%. The 2-year yield at 4.08%. Oil headed for its biggest weekly drop in a month after transits through the Strait of Hormuz accelerated. Ships have been openly transiting Hormuz following early progress toward a lasting agreement to end the U.S.-Iran war. There are some new tensions in the region, but oil is still dropping. WTI crude now down 3.8% at $69 a barrel. Brent crude closing in on $72 a barrel. That's about 4.5% lower. Consumer sentiment in the U.S. rose in June as lower gas prices provided some relief for Americans grappling with high inflation. Consumers expect prices to rise at an annual rate of 4.6% over the next year. That's down from 4.8% in May. They also saw costs rising at an annual rate of 3.3% over the next 5 to 10 years. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Businessweek Daily with Carol Masser and Tim Stinovec.
All right. Thank you so much, Amy Morris. Yes, indeed. Carol Master, Tim Stanovic, live here at Uncharted in Southampton. A pool behind us. Lots of people around us. There's a lot going on.
Yeah, a lot of people drinking Poppi, too. Did you see that?
I did see that.
Yeah, lots of people are drinking Poppi. You know, find a problem and fix it. That's the context of talking about this company.
How many times when we talk to venture capitalists, like they say, that's what people have to do. That's how you have to think about starting a company. And that's exactly what our next guest has done. And sometimes it's a personal, problem or situation that leads you to creating an amazing company, one that actually gets bought out by PepsiCo for $1.95 billion. And that happened last year. We're talking about Poppi. Allison Ellsworth is co-founder of the company, and she joins us here at Uncharted. Welcome, welcome. Nice to have you here with us.
Thank you. And hey, let's call it $2 billion, right?
Oh, okay. We'll round up. We're good.
We're going to round up.
It's a lot of money. Tell us, though, I love the backstories. I watch these guys now, Shark Tank, a lot. That was certainly something that played in. But tell us about how you came to create this company.
I think like most great things, I created it because I had a personal problem. I had some gut health problems. I started drinking apple cider vinegar, hated the taste, and I wanted to create something that tasted better. Have you guys ever taken a shot of apple cider vinegar?
No, I have not.
I know lots of people who have, though.
It's disgusting. So I went to my kitchen and I created the first version of Poppi, went on to get a deal on Shark Tank, and now we're in every grocery store in the nation. It's wild.
It is pretty wild.
It's a really crowded space, and
Yes.
it's hard. I mean, you could walk into any sort of convenience store or grocery store, and those are the companies that have succeeded in getting the shelf space. Just getting the shelf space
It's
is
hard.
difficult. How did you do that in the beginning?
We hired really smart people. So after getting a deal on Shark Tank, our network was opened up.
So that's where everything changed.
You bring in people that know the industry. Beverage is really hard. Someone downstairs just asked me, they wanted to do a beverage. And I said, one, it's capital intensive. You have to have a lot of money. You're shipping liquid across the U.S., manufacturing, shelf life. There's so many things that go into it. And you really want to surround yourself with smart people. And the beverage industry is small. So network.
It's really about who you know in the beverage
It really
because
is.
you're fighting for shelf space,
Yes.
essentially, right?
Yeah, and then you're working with the retailers, and we were before the time, like we were calling ourselves soda. We were revolutionizing soda for the next generation, and they were like, that's hilarious, and so they didn't know where to put us on the shelf stakes. Basically we were in the sparkling water set. We were, in enhanced water. They didn't know what we were. It was hard.
Well, now the idea of a functional beverage, everybody kind of knows about that.
Yeah.
You guys were early to that, of course. I'm curious what you see out in the landscape right now that is missing. Like if you were to develop something right now, what would it be?
Well, I am developing something right now, and we're launching in the fall to fit that gap. But it's what it is it has to be better for you. And not so better for you that it's just like people don't understand. There's a lot of adaptogens and all of these things. Protein is really big right now. But I don't know, would you like to drink a carbonated protein drink?
I've tried a carbonated
It's
protein
tough.
drink. It wasn't easy to drink.
It's tough. I'm telling you, I wouldn't do that. But I will say something that's just a little bit better. And that's what we did at Poppi. So
Have you figured it out?
I have figured it out. We're launching in the fall.
But launching as is right now, or do you still have to iterate on the product to get it there?
We're loaded,
You're there.
we're hiring, we're going, and it's one of those things that we have so much we learned at Poppi from building team and scaling that why would we not do it again?
Are you raising money for it, or are you bootstrapping it?
A little bit of both. Right now we're going to use our own money for about, $2.5 million or so, and then I would love to de-risk and bring in strategic partners that can help really catapult the business.
What are you learning about the marketplace in terms of products, types of products that people want today?
It's that movement within Maha that we're really seeing no dyes, no artificial ingredients. It actually drives me insane when my kids have Cheetos or Doritos, and Pepsi's changing that, right? They're taking the dyes out of it. So I think it has to be just 10% better or 30% better. It can't be 100% better for you. People still want full flavor. America likes flavor. It has to taste good, and that has to be king. Taste is king.
Is it more expensive to do things?
So expensive.
Yeah. And without all these additives or
It really
kind of
is
cutting corners?
and people get really confused around the word natural flavors.
Natural
as well.
means nothing.
It's very confusing, and how it's made and what are in the natural
Sorry.
flavors. No, it is. But if you think of your,
It's not organic.
it's not non-GMO. There's so many things that go into it.
Yeah.
So I think it just has to be better for you. I do think non-GMO is important, and people are reading labels more than ever.
Is it more expensive to do, though?
It's absolutely more expensive.
Okay.
Yeah. Artificial ingredients, all of those things are really cheap. But really what the most expensive thing is the packaging.
Mm-hmm.
The packaging more so than what goes into it, and then the shipping cost and all of that goes into it.
We're speaking with Allison Ellsworth, the co-founder of Poppi, which she sold for $2 billion to Pepsi.
We'll call it that.
Last year. She joined us at the Uncharted Summit.
You can round it up.
We can.
You are so right.
You're doing this for a second time, essentially. And I imagine you learned a ton the first time you did this. What are you doing differently to get this product onto the shelves, to get into the hands of consumers, to get consumer and brand awareness across the country that you didn't necessarily know how to do until you maybe failed at doing this or found the right niche for it with Poppi?
Where entrepreneurs fail a lot of times is they refuse to professionalize their business. So the first thing we're starting with this time is an org chart. We're seeing what can we do to build an incredible team around us, and you hire 18 months ahead. You don't hire for now, and you don't let your ego get in the way of growth of like, I need to do every job. And that's one of the biggest mistakes that entrepreneurs do, is they don't hire people smarter than them because they think they know everything. So for us, that's one of the biggest lessons, is professionalize the business, bring in like incredible people, and build a platform that can scale.
What is it like to sell a business that's been, your baby, and you created it, and it was really personal for you? I've talked to lots of founders. A lot of them have their name on the company, and when you let go, initially it's great because it's a lot of work, a lot of hard work, and your whole life is the business. But at some point, it's like, it's hard.
Yeah, I mean, essentially it was 10 years of my life, never taking vacations. I had 3 kids while doing it, and then you're gone, right? The business is gone overnight. You're no longer in it 80 hours a week. And people don't talk about the post-exit blues. It's a real thing. It's an emotional roller coaster. And look, money gives you freedom to do what you want, when you want, with whomever you want, but it doesn't give you purpose. So find your purpose, and that's what we're doing again, because if you find your purpose, money will come.
How soon did you have to find your purpose after selling?
I mean, it took I played golf for like 4 months, and then I was like, okay, I beat my husband a couple times. I was like, okay, I'm over this. And, we had fun, but I really missed the team. I missed the build. It's just the entrepreneurialism that people have. That's the craziness, right? It's why we do it.
What's it like raising money this time around? Because I'm guessing you don't really have to be proactive about it. People are knocking down the door after an exit like that. It's
actually like so many people are like begging to actually invest. But for me, we are only going to take strategic money that can actually make and move. And it's, when I say strategic, it's the network. It's how can we network with them.
So money from a distributor, money from a company that could potentially acquire you,
retailers,
or has,
people that can, celebrities, influencers, talent is a huge piece of how we scaled Poppi.
But it matters because you want to be able to drive where you want to go, correct?
Yes. And small, right? I think I could probably call a lot of retailers and go into them really quickly, but I think you have to be intentional and build a brand. Start in like those better for you retailers, from the Whole Foods to the Targets to the Sprouts, and then really grow versus going so mass, so big, which I think a lot of people could make a mistake.
You sure you don't want to make the announcement now, Allison?
I know, not
this
quite
is a
ready.
Great audience.
I know, I love Bloomberg. Yes, I know, but stay tuned.
Okay, we will come back.
Thank you.
When you can make the announcement. Allison Ellsworth, she is co-founder of Poppi, joining us right here at Uncharted.
Hey, coming up next, we are taken to the skies. We're going to be joined by Alex Hawley, the Chief Revenue Officer at Sentient Jet. That's next on Bloomberg Businessweek Daily.
All right, stick around, everybody.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, we are back at Uncharted. Carol Masser, Tim Stenivek, live here in Southampton. We want to continue because we've talked so much about private aviation, and certainly during the pandemic, all of a sudden it saw a boom because folks were wanting to go places, but they didn't obviously want to get on big jets, or they couldn't get on big jets.
All right, if you thought the pandemic was a boom, what about the AI boom and the wealth that's being created right now? That's the question.
I am curious about all these people going through IPOs or getting ready with these AI-related companies and their valuations. You probably have a lot more money to spend.
Alan Hawley is Chief Revenue Officer at Sentient Jet. He joins us here at the Uncharted Summit in Southampton. Alan, good to have you on the program. Welcome, welcome.
Did you take a jet here?
I did not take a jet here. I traveled old-fashioned, but thank you for having me, and what a location.
I know,
Incredible.
beautiful.
It is pretty great. I'm just curious about that real-time view of wealth that you're seeing right now. The folks who may not have the liquidity yet, but are sitting on paper wealth in the tens, hundreds of millions of dollars because they were employees early on at OpenAI, SpaceX, or Anthropic. Are they calling you up?
Great question. Thank you for asking that. It's obviously, so Sentient Jet, we founded the jet card industry about 26 years ago. So we perfected it over the years, and there's been a huge amount of change in that time. You bring the pandemic, that brought a different variety to how people flew, different levels of demand than ever before. And what we're seeing now, to your point, Tim, is a lot of the younger generation. We see a lot more flyers now in their mid-40s. I think traditionally people think it's people in the latter stages of their career, maybe even retired. So definitely seeing a younger generation. A lot of that is driven through AI. We now take payments in crypto. That was a demand from our customer base too. And to your point around people that aren't yet, let's say, liquid money, but have that net worth tied up in stock, perhaps. That's where a jet card model is so important to them. It gives them that flexibility to maybe start at buying an hourly rate, learn how they want to fly. It really is a time machine, to one of the better things. Time is one of those luxuries that you can't buy.
Yeah.
So it's a great entryway into the private aviation industry.
All right, so Alan, is that a yes? So that those folks...
That's a long way to say yes. Yes, we're seeing a younger generation. A lot of that is driven through technology, and a lot of those individuals here at Uncharted is exactly the clientele that we try and cater to.
I am curious, too, about... I think the last time we talked with your CEO, this was back in May, we were thinking about the war in a big way and thinking about the cost equation and higher energy prices, higher jet fuel. It seemed to be like the business was doing well, but what impact has those higher jet fuel prices had on your business?
It is a great question. It's something top of mind for a lot of flyers.
Yeah.
I think one of the things that you find, I mentioned earlier about the savings of time, it's very difficult to put a cost on that. So the cost of fuel, which is a result of obviously what was happening overseas, is something that impacts everything, whether it's commercial or private. What we're finding is that people still need to fly, and in fact the onus has moved from maybe looking at cost to reliability and consistency. If you're going to spend more money, you need to make sure you get that level of service back. So it's been great for Sentient Jet.
It hasn't slowed any kind of business at all, or has it increased it?
So the market as a whole has actually increased, I think, 11% year over year here in the US. I think 4% globally. We've seen 300 new customers in the last 9 months. So we're over 7,000 customers now. So we're finding that people really center on the level of service that they need, particularly when there's turbulent times.
On that level of service, you're an asset-light business.
Correct.
Not like FlexJet, sister company. We talked to them too.
Yes.
Just remind everybody where you play in this. And I guess my question would be really about the way that service is consistent, because you're not flying on an aircraft that's owned by your company. You're going and finding that. Your customers are using their hours on their jet card to do that. How do you make sure they have a consistent experience?
Another great question. So over the last 26 years, we've built a network of operators, which, if you're familiar with the term Sentient Certified, it's a bit of a badge of honor in the industry. So from a safety perspective, we pick the very best of the best. So only around 30% of total operators make it into our network. So we're constantly vetting those operators. We believe in kind of a less is more model, so we really kind of work with those guys very, very closely.
Yeah.
Every flight is monitored in real time for every individual, so 24/7 support. So it's that additional level of service that we provide, irrespective of the operator that they're running on. We've got a very close relationship with the operator, a very close relationship with the client, and we really play that intermediary to make sure that is as smooth and flexible as it can be, based on their particular needs at the time.
All right, considering that Tim stayed up late watching the World Cup, I got to ask you a World Cup question. Tell me, is there a World Cup effect for you guys?
A huge World Cup effect. Yeah, I'm English, so I've been following along too.
Fair enough.
I think the US are doing very, very well. So yes, we've seen a lot. We've had over 100 bookings in the last month for the World Cup alone, which is great. And the interesting thing about the World Cup is the flexibility.
Yeah.
You don't know where your team's going to be playing necessarily. So the ability to, a very short notice, and Sentient Jet, we take potential flights in, whether it's text, a phone call, it could be through the mobile app. At the very last minute, people say, I need to get from point A to point B. And that's where the jet car model works so well.
I know. We've got a couple colleagues, right, who've been like hedging with tickets and trying to figure
I think they're
things
flying
out.
commercial, Carol.
I think they might be.
Yeah.
Maybe we can help them out.
We will send them your way. Alan, thanks so much. Alan Hawley.
Thank you very much for the invite.
He is Chief Revenue Officer at Sentient Jet, joining us right here at Uncharted.
Hey, we got a great couple of hours coming up next on Bloomberg Business Daily. Bloomberg Businessweek Daily, if you are sticking with us. If you're watching on TV, the close, well, it starts right now.